Happy Hump Day, everybody. Today is Wednesday, August 17, and this is the special report I warned you about Monday. What can go right? This is the top question. More like, what sends stocks higher from here? I've been saying for a while that we'd have a good second half, but not one that takes us into positive territory for the year. But if it is going to happen, what can help us do that? Let's just recap where we are now. As of last Friday, we spoke about these numbers a few weeks ago also. Since the June low, the Dow is up over 13%, the S&P 500 is up over 16%, and the NASDAQ is up over 22%. Oil is down over 20%. Commodities, many of the prices are down big. Gas prices down at the pump every day for the past 50 plus days, from over a $5 per gallon to a 3 handle in some places. I know I paid $4.09 this past weekend. That leaves markets still down, but is this a bear market rally or is it the start of the next leg up for the year? For this year to date, the Dow is down 5.98%, the S&P 500 is down 9.35%, and the NASDAQ is down 16.20%. I do want to keep in mind, we have a lot of positive, but we have a lot to worry about also. Just to keep the list in front of us, and maybe the markets will keep climbing the wall of worry, we have the U.S.-China drama. We have Taiwan last week and again this past week. I can't explain why lawmakers feel that it's necessary to show up in Taiwan. I'll leave politics alone on that one. We add in Russia, Ukraine, and of course we have a geopolitical mess in the world. We also have to keep an eye on OPEC and what they do with oil supply. COVID lockdowns in China, the Fed heads, no Fed meeting until September, recession questions, CPI and PPI numbers, employment updates, and the rest of the eco numbers. And that's just a simple list off the top of my head. Let's talk about a few things that I think we need to watch for, and if we think that these most recent moves can hold and be built on, this is what we got to see. Over the past few days and since mid-June low, investors are using data like the most recent CPI and PPI numbers to price in a soft landing and less of a chance of any significant economic slowdown. The market's going on the idea that the Fed won't have to raise rates since inflation has peaked, or at least that's the narrative that the market's going on. Is there evidence of this? In the markets, yes. Cyclicals have bounced, defensive stocks, including defensive supercap tech stocks, all with strong showings recently. The 2-year remains flat while the 10-year yield has moved up about 20 basis points. The dollar's dropped back below 105 for the first time in a while. Commodities have bounced a bit, and all this leads us to answer the question I just raised for the video. What do we need to move materially higher from here? If we're looking for the peak inflation, that trade to move us higher from here, sorry, I think that's priced in. I think that trading and the fact that a lot of money managers have been off sides and needed to get back into the stocks, that's what has us back to these levels. These levels, about 4,300 on the S&P, that's pretty rich if you take into account the following 3 data points. Number 1, rates are still rising. Even if you think we're going to 50 and 25 points down the line, they're still rising. The economy is slowing. Number 2, not falling off a cliff, but it is slowing. By the way, as I've told you before, that's the point, demand destruction. You have to slow that down. And number 3, downside earnings risk. We're entering a tough couple of months in the market, September and October, not just for market volatility, but for earnings revision. So if we want to go higher from here, we'll need to see evidence that a soft landing is actually showing up. We'll have to focus on a few things. We'll have to watch eco data. We'll have to look at inflation matrix, and we'll have to see what the Feds have to say. All 3 will have to go the right way, and the rose-colored glass, and if those rose-colored glasses stay on, watch out. I will add one more. We know there's no Fed meeting this month. Why? Well, the Federal Reserve heads go out to Jackson Hole, Wyoming for retreat and meetings. That market will be really watched closely, and the market will want to hear from Powell or Brainerd with a signal that they're going to have a dovish pivot along the line soon. If they do not, the market will be disappointed. Bottom line, the idea of peak inflation has powered this strong rally in the past few months, but if stocks are to meaningfully move higher from here, the soft landing will, with resilient growth and quickly falling inflation, along with peak hawkishness from the Fed, will need to start showing itself in the next few weeks. That's what can go right. The remaining question I'll leave you with today. Are we in a recession or is one coming? Fun fact, last weekend NPR reported that Wikipedia froze edits to the page for recession, since the crowdsourcing site had so many edits trying to redefine the term. It seems that this close to the midterms, words and definitions are even more at play. That's what can go right. We'll see what happens. That's what we need to see if we want to see this market go meaningfully higher from here. Keep an eye on things. We'll come back on Monday for a market update and come back on Friday for a planning video. Have a great rest of the week.